Good morning, everyone. This is morning in Australia time, that is. This will be evening in the US. I've just thought about doing a market close live stream. I haven't really done a live stream in a long time. So just let me know if you can hear me and if it's working. Because I haven't done one in a while, but I'm pretty sure it should be working now. Is it working, guys? Can you hear me? Yes, sweet. Okay, so yeah, we're just gonna instead of me just recording a video for the market close, I thought I'd just do a live stream. This is morning time for me in Australia, and this is when I wake up and read the finance news. So I thought, you know what, let's read it together. Let's read some finance news together. You can make yourself a cup of tea, wherever you are, and let's get into it. So let's get into the market. Say this is a quick market summary. So stocks rise for third day to extend markets comeback from January sell-off, and the markets were up again today. So let's get into the indices here. So I'll bring up the Nasdaq. So the Nasdaq was up about 0.6% today. The Dow Jones was up 0.78%. Volatility was down today. It was pretty flat day. We see oil's continuing to slowly rise to $88.38. Gold was pretty flat today, just up 0.26%, and silver had a bigger rise up 0.7%. And if we go here and have a look at Bitcoin again still pretty flat, just up 0.6% to 38,700. So we'll have a look what the summary says here. So let's bring this up here. Yep, so that's what we went after. So after being widely distracted in the month of January, investors and traders are finally starting to focus on earnings season. So that's what we're going to have soon. We'll get earnings from, I think, Amazon, Google. We'll get a lot of those big tech sectors. But really what I'm looking for with earnings is what's the guidance going to be? Because, of course, earnings the past quarters, the past year in 2021, they're going to be pretty good because of all the stimulus. But with the supply chain issues, with consumer confidence down because of inflation, I'm wondering what are those earnings going to be for their forward guidance, like it's talking about here. Well, let's see what did well in the markets today. So bank stocks led the market higher, with Goldman Sachs and JP Morgan gaining 2.6% and 1.7% respectively. Wells Fargo also advanced 3.3%. I'll switch it here. So, and that's something I've been talking about a bit. I've been saying, with rising interest rates, this may be good for banks because rising interest rates, it's more profit for them. Their margins get wider. And banks really, one of the main costs they have is labor, which has been going up. But besides that, they can normally, with a high inflationary time, higher interest rate time, they can increase their earnings pretty quickly. So let's see what else we got. So yeah, the 10-year Treasury yield, that's what we should have a look at. I'll just bring up 10-year US Treasury. Let's bring this up. That's the Australian one. We don't want that one. We want the US one. No one cares about Australia. Just joking. All right. So yeah, it's still pretty flat to around 1.8%. The bonds haven't been moving that much lately. Let's see what else is going on here. Okay, so we're seeing the rebound in the tech stocks. So Netflix and Meta, which was Facebook, contributed to the gains, rising 7% and 1.8% respectively. Alphabet also advanced 1.6%. And this is what I talk about. These FANG stocks, the large cap stocks, they can, they run the Nasdaq. They can move the market, even though the broader index is down. Like we've seen, 40% of stocks down, 50%. A lot of stocks have been in bear markets for months and months and months. But these large mega cap stocks, they've been booming, so they're holding up the index. Let's see what else. So January, yeah, they stepped in to buy the dip. So yeah, there was a big sell-off in January. So like I thought we'd see a bit of a rebound because during downturns, it's not just going to be a straight decline into a bear market. There's going to be a lot of volatility. And that's what we're seeing now. And also there's technical indicators that traders look for. So if the indexes are oversold, they're going to come in and buy them, and it may just be for a short-term swing trade. Let's see what else is happening. So yeah, it was on track to be the worst January since 2009, as we can see here. All right, what else is happening? And they're just talking about the Fed. So it'll be very interesting to see what the CPI says when it comes out this month, to see if it is actually going down or if it's still going up or if it's flat. But remember, something I was also thinking about lately is remember the Federal Reserve was eventually going to stop quantitative easing anyways, and they were eventually going to have to lift interest rates a little bit, say at least 0.5%, even without inflation being a problem. So really, all they're doing is what they're going to do anyways in 2013, but they just brought it forward a year. So really, if they did want to fight inflation, they would have lifted interest rates at least 6 months ago, and lifting them by 1%, it's not going to do much. They would have had to lift them by at least 3%. So then they're going on to say January was the worst month since March 2020. Let's see what else they're going on about here. They're talking about the Fed. Okay, what else is happening? Let's see what the analysts are saying. We're starting to see February on a traditional weak note, in that it is the second worst month of the year on average for the S&P 500. Okay, so traditionally January is a good month for stocks, but we saw them fall. And February is traditionally a weak month for stocks. So let's see what they say. Posting a minor decline on average and rising only 53% of the time. So 50% of the time it's good, or it could be bad. So this is the second month. This is the second worst month besides September. So February and September on average aren't normally good months. So yeah, this is what I was talking about. We got earnings coming up. So we got Alphabet. They'll be reporting earnings. Amazon, Meta, and you know something I'm a bit worried about for Google and Facebook. This is going forward for the revenue. As YouTubers, we know what advertisers are paying, and advertisements have been down lately, which doesn't really bother me. But for the company Google, that's going to hit their revenue because ad rates are down significantly. All right, what else are they talking about here? So the combination of earnings season starting in the bond market finding a bottom allowed the markets to stabilize. That's what they're saying. Okay. All right, saying it's been a good earnings season so far. So UPS reported better than expected earnings that hikes its quarterly dividend, setting the stock up 13%. Shares of ExxonMobil gained more than 3% after the company reported better than expected quarterly earnings, and revenue jumped 80% year over year. Alrighty, let's see what else is going on. So yeah, so I'll just have a quick look at the chat, see how's everyone going. Alrighty, crypto, all good, bro. Is March going to be turmoil? Let's see. Normally what happens with the markets, with the Federal Reserve lifting interest rates, is they try to price it in before it happens. So in March, when they actually do lift their rate hike by 0.2%, unless it's a surprise of a 0.5% rate hike, the markets would have already priced that in. So it's going to be more about companies' earnings and consumer spending and economic activity. Google smashing earnings up 7% as Google released their earnings. Let's see. I want to join for free. Let's use something different. Google. Okay, so after hours. So they must release earnings. Normally it would come up on CNBC here. Let's have a look. Nah, hasn't come out. But I can see, yeah, here in after hours, you can see it shot up. So they must have had strong earnings. And this is looking back at the previous quarter. So previous quarter, the ad rates were pretty good. But I'm looking forward at the Q1 this year. All right, it'll be good if GM forecasts 2022 operating profit of between 13 billion and 15 billion. Okay, I'm waiting to see the news about the Alphabet's earnings. Hi from Australia. Good morning from Australia. See what else everyone's saying. Okay. This is also something, just a heads up for you guys. This is something I look at when I wake up in the morning here in Australia. This is a website called Finance News and Blogs. And instead of me having to go to each individual site one by one, it just has it here all for me. So I can just refresh this and just categorize all the finance news for me, which makes it a lot easier. So let's see, Fox, labour shortages has Home Depot pushing accelerating hiring process. So yeah, that's something we're continuing to see with the Great Resignation. Oh, holy smokes, thanks for the super chat. Is it Sky? Thank you. So labour shortages, something we continue to see. This is going to keep pressure on inflation if it keeps going. It's going to be interesting to see if, they don't try to boost immigration to help with the labour shortages. I think that's what eventually is going to be coming. Green from Canada, g'day, how you going? All right. So let's see what else is happening in the news. All right, White House does not mention China in statement supporting Dems' China anti-competition bill. Here we go. The US debt has officially hit $30 trillion now. So I don't want to pay for New York Times. Let's go to the debt clock. Let's bring this up here. Holy flippity flip flap flop. US debt. Oh, it's clickbait. They got me. These news articles are good with their clickbait. It hasn't hit 30 trillion yet, but it is about to hit 30 trillion. So 29 trillion 314 billion. And this is something I've also been thinking about with the Federal Reserve and been listening to some other people saying, I don't know how the US government is going to be able to afford it if the Federal Reserve has to get interest rates up to what they need to get up to fight inflation, because what they're saying is they're going to lift interest rates by maybe three rate hikes, 4 rate hikes, maybe even 5 rate hikes this year. But normally, like what we saw with Paul Volcker, he had to get the interest rate up to what inflation was at least to fight inflation, to bring it down. But if interest rates go up by 3%, and remember, inflation's 7%, so in real terms, it's still a highly stimulative, it's still a highly accommodative interest rate. It's still, if you think about in real terms, a negative interest rate, so they don't have to have interest rates officially negative. All they have to do is make sure inflation is much higher than the actual interest rate. So yeah, it's something I'm thinking, they say the Federal Reserve's independent. I don't believe that. Here we never believe what the Federal Reserve says. We don't take what they say at face value. If interest rates just go up by 3%, that's going to be another 900 billion in interest costs for the government. Their revenue was about 4 trillion last year. The spending was about 6.8 trillion. And even the Federal Reserve, Jerome Powell, when he was asked in Congress in a Senate meeting, he admitted that yes, the debt is on an unsustainable run, and it can't keep going up like this. What's going on, everyone? Just looking at the chat here. He had a dip out on me, Kevin. Yeah, Federalize. Holy smokes, we're live. Yes, that's right. Yeah, that's right. India government announced digital currency. That's something I'm going to be doing a video on. It was here on Bloomberg. Yes, this is what I was reading. Nighttime. This was morning US, but nighttime here in Australia. So India finally warms up to crypto tax. Finally warms up to crypto with a tax and their own digital currencies. So they're kind of following the suit of China here. China already created their digital yuan, but remember, these are very different to cryptocurrencies. Really, it's just a digital version of their own currency. And so it says here they're going to tax virtual assets at a rate of 30%. And this and this really lifts up a lot of uncertainty, because in India there was a lot of uncertainty about trading cryptocurrencies. Many people thought they were going to ban it, or they had kind of a shadow ban. They didn't really like it, but I guess they really need some extra tax revenue now, and so they aren't going to ban it. They're just going to tax it. So they plan to introduce the digital rupee in this year, starting in April. So that'll be very interesting, and it's definitely the trend for all countries. And this is something I think that's going to come during the next market crash. These central banks, they're going to release these digital currencies. They'll give you a wallet, and instead of like what the US did in 2020 of sending you stimulus checks, they're going to send this digital dollars or digital rupee or digital yuan to your wallet, and they'll say, okay, here's your money. You have to spend it here in these industries. You have to spend it by this date, or your money's going to expire. I'm pretty sure that's what they're planning to do. And so if instead of negative interest rates, they could have, the balance slowly going down over time if you don't spend it. So let's have a bit of a deeper look here, what they're planning to do. So India took a step closer to adopt cryptocurrencies after years of wavering on its stance as the country seeks to keep up with global move toward digital assets. So Bitcoin gained slightly on this news, but not too much. But remember, India is the sixth biggest economy, and it's definitely on track to overtake the UK, with its GDP growing at about 9% per year. So we definitely have to watch what India's doing, because I think, like China, they definitely will be one of the biggest economies in the future. So let's see here. Yep, they will launch its digital currency this year starting April. Yep, same thing. Like I said, they're going to tax all transactions or trades at 30%. So the imposing tax rate makes crypto trading official now, and any concerns of a ban is off the table, said Deshan, co-founder and chief executive of Vlad, a crypto exchange platform in Singapore. So it's still a relatively high tax rate, and could prompt traders to move to platforms in other countries, which would reduce revenue for the Indian government. So what they're doing with their budget, I saw briefly, is, they're really cutting back. They've done a lot of spending like governments around the world, and I guess they're now going to try to use crypto as a way to bring in more tax revenue. So Bitcoin rose 2% from the day's low following the taxation announcement. So far, India doesn't have any law regulating trading in virtual coins, though it had proposed a ban earlier last year. So I remember this time when last year they were thinking about banning it, when the currency was falling. Normally, with all these emerging markets or other countries that don't have a very strong currency, they're not very friendly with crypto, because it places more of a risk than other countries that have more stable currencies. All right. The local market surged 641% in a year through 2021, according to an October report from Chain Analysis. So yeah, I think crypto will probably pick up a lot in India. There's been a phenomenal increase in transactions in virtual digital assets. The magnitude and frequency of transactions have made it imperative to provide specific tax regime. Yeah. Okay, so these are the key takeaways. So losses from transfer of digital assets can't be offset against any other income. So again, they don't want to reduce tax in India. They're definitely trying to increase their tax revenue, so you can't offset losses. All transactions will be taxed at 1%, the source says. And gift of virtual assets will also be taxed in the hands of recipients. So yeah, I think this is just more of a tax grab from India, because they've just spent so much over the past year. And even talking with the current food shortages and food crisis that's going on, I think they're having a lot of issues too, their farmers, with rising, fertilizer costs. Fertilizer costs are going up around the world, and this is really hitting the developed countries. So we'll see what else everyone's saying in the chat. How you doing? Let's have a look here. How many we got here? 750 people. Awesome. Talking about oil, crypto. All right, let's see what else is happening in the morning news. Anything about Alphabet? Okay, here's a earnings report for Alphabet. Let's see what the share price is doing now. So yeah, it's up about 7% in after hours. You can see here. So that's definitely going to lift the index. But again, the key is what are their guidance going to be moving forward. So Alphabet, Google beat sales estimates for holiday quarter. Okay, so higher than expected fourth quarter sales as the search giants, internet advertising and cloud computing businesses benefit over the holiday season from growing surge in online shopping. Now again, yes, the ad rates were good in Q1. They're not looking good. So Alphabet's overall quarterly sales jumped 75 billion above the average estimate of 72 billion. And among financial analysts tracked by Redfinite, totaled Google's revenue was 74.9 billion, above the estimate of 71 billion. So shares rose 4.5% and are now up 7% in the after hours. Let's see what else they're saying here. The company's third straight quarter of record sales reflects the growth of ad-laden Google services such as internet search, email, YouTube video streaming since the pandemic made hybrid work and e-commerce customary across the world. Now, something I'm seeing with this is I'm seeing a lot of the work from home, or people that, made an income from YouTube in 2021. I'm seeing a lot of them go back to work now. So again, it's going to be very interesting to see what their Q1 earnings are. So Google generates more revenue from internet ads than any other company. And also what you have to know is in the US is most advertisers, they save their marketing budget for the end of the financial year before December. So a lot of that advertising budget is in the last quarter. Google has said that during the third quarter, it lost some sales because companies running low on product trimmed marketing and new iPhone privacy measures curled its ability to track users online. So what? It's disappointed it can't track users online with the iPhone privacy measures. That's a bit weird. Okay, the company also announced on Tuesday a 20-for-1 stock split that would come in July if approved. Okay. 20-for-1 stock split. Okay, so we saw Tesla did this, and Tesla priced the Tesla stock definitely skyrocketed. So it looks like Google Alphabet is looking for a 20-to-1 stock split that could come in July if approved by shareholders. So that's very interesting. Even though it doesn't change anything fundamentally with the business, but people look at a stock that's $2,700 and they go, you know what, I can't afford that. I'm not going to buy it. But if they could reduce the stock price to $130, then obviously a lot more people will think it's cheap, even though they don't look at the market cap and will want to invest in it. Okay, let's see what else is going on in the chat. Is there anything you guys want me to look at that I haven't covered yet? Okay, we're talking about India here. Okay. See what else is happening in the news. To be honest, I don't know much about India's stock market, so I'd have to do some research on that. I've just looked at the budget recently, and it's looking like they're going down a tightening measure and looking like they're trying to find ways to increase tax revenue, but also not good what's going on with the fertilizer costs increasing. Okay, let's see what else is happening. Gas prices in California will soar following an LA ban on new oil and gas wells, industry representative warns. So, geez, gas prices I think are already high enough in California, and they're about to get a lot higher. Yep, I've been following what's going on in Turkey. Yeah, it definitely doesn't seem good. That's what happens when you let inflation run hot and you just print your currency into the ground. But luckily for the US, they have world reserve currency status, so they can get away with it for now. Okay, this is finance news and blogs. So this is the way I can just get all the news in one place. I don't have to keep switching tabs or trying to find out what's happening on other news sites. So Tesla recalls all vehicles with full self-driving. this just FUD or is this legit? Tesla recalls all 51,800 vehicles with its full self-driving feature. Get away ads. Let's have a look. Yeah. Tesla will recall, after it was intentionally programmed to slowly roll through stop signs in some scenarios. The recall will impact Model S, X3, and Y vehicles that have its beta version of full self-driving software enabled. Full self-driving is a controversial driver assistant feature. Yep. The technology sometimes steers Tesla vehicles smoothly and obeys traffic rules like stopping for red lights, but in other cases it has proved inconsistent according to accounts from alarm drivers using the software. Tesla says that full self-driving requires an attentive driver who is ready to take full control of the car at any time. So yeah, I don't know. There's still got a lot of issues weeding out here with Tesla and with their full self-driving mode. But to me, obviously you have to always watch and be attentive. But what's the point of self-driving if you still have to have 100% focus? Which of course you're definitely going to have to do because you can't trust the technology, but kind of defeats the purpose. So, full self-driving has been capable of rolling through stop signs since the release of the first version in October 2020. Tesla decided to disable the function following meetings this month with National Highway Traffic Safety Administration, which regulates motor vehicles. What do you guys think about this? The Vehicle Safety Act prohibits manufacturers from selling vehicles with defects posing unreasonable risk to safety, including intentional design choices that are unsafe if the information shows that a safety risk may exist. Okay. So Tesla will disable the function as soon as this month in an updated version of full self-driving software that released over the internet, according to the document. The automaker filed. Drivers won't need to take their vehicles to be serviced. So what do you guys think about this? Would you be comfortable with a full autonomous driving car or self-driving car? I still wouldn't feel comfortable yet. Okay, so they did not immediately respond to request for comment. See what else here. So yeah, let's keep going into that. Let's see what else is happening. The news. So analysts on tech industry will continue to grow despite inflation, potential recession. I guess tech companies, they don't have many costs, so inflation won't hit them as high, but it's just the cost of capital, because a lot of them are venture capitalist companies, and when interest rates go up, the cost of raising capital goes up. Oh, for all you coffee drinkers, this is bad news. Bad weather, supply chain woes push up the price of coffee. Okay, so oil futures settle modestly higher ahead of OPEC meetings. So it'll be interesting to see what OPEC does with the increased in oil costs, because if they say they're going to reduce, it's going to make oil costs and inflation get even worse. But if they increase production, we may see a softening in the price. Okay, LA City Council approves. Where do we go here? Phase out of oil drilling, bans new oil and gas wells. So, yep, California gas prices aren't high enough. Well, they're about to get even higher. Riskiest corporate bonds show Federal Reserve has room for hikes. Let's see what this says. With the corporate bond market, this is companies that can just issue an IOU. And this is talking about the riskiest corporate bonds. So stocks are volatile, but junkiest bonds show little worry. Fed may see green light for front-loading rate hikes. Now, I think the reason why the corporate bond market is a lot different now compared to what happened before 2020, because what happened in 2020 was something unprecedented and something the Federal Reserve's not normally meant to do. But they got around it by using BlackRock. They pretty much made a deal where instead of them buying corporate bonds to bail out, pretty much it was as close as you could get to as bailing out the stock market. Because even companies like Apple, they brought Apple bonds when Apple had huge amounts of cash. They didn't have any issues at all. But when the markets were crashing down 35%, the Federal Reserve announced they will start buying corporate bonds. So any company could issue an IU, issue a corporate bond debt, and the Federal Reserve will come and buy it at any price. So I think now the corporate bond market is thinking, look, if anything gets too bad, Papa Pow, the Federal Reserve will come there to save me. Okay. See what's happening here. So yields suggest credit is still plentiful. Because yeah, we did see, look at this, in 2020, before the Federal Reserve announced to bail out the corporate bond market, look what happened to yields. They went up to nearly 20%. But as soon as the Federal Reserve announced, okay, yep, we'll start buying junk bonds, junk corporate bonds, yields plummeted. And they're still down very low, probably because they feel invincible now that, the Federal Reserve will come there to save the day. Okay, let's see what else is happening. It's a fair bit of news today. It's good. All right. Gold futures settled back above 1800 for the first time in nearly a week. So yeah, we're seeing everything rise at the moment. That reminds me, what is the DXY doing today? See what the dollar's doing. Philip. Oh, thanks, Philip. I don't think the bubble will pop anytime soon, but will still mostly be in defensive assets. Yeah, it's definitely hard to time exactly when it's going to happen, but we just see every time there's a bit of an issue, the Federal Reserve takes their foot off the gas. It's going to take some kind of black swan event, I think, to bring this down. It's going to take companies' earnings to really drop. So we see, yeah, the DXY is continuing to fall. So again, like I said, when the dollar falls, all assets rise, and vice versa. That's why we saw assets falling over the past month, because the DXY, the dollar, was rallying, and especially commodities like gold and silver, and we saw Bitcoin falling the previous month as well. Okay, let's have a look what else is happening. Normal supply chain, it's unlikely in 2022. So yeah, still a lot of companies saying that supply chains aren't going to get fixed anytime soon. But also the issue will be, oh, Johnny Bravo in the chat. 669 cents. Oh, $6.90. Thanks for that. You're the man. All right. Cue the fire, should I say. I'm still waking up, everybody. Everyone go check out Johnny Bravo's channel. He does daily finance news like me as well. Ooh, coup attempt underway in Guinea, West Africa. So it's a lot of stuff about oil. Cathie Wood's ARK sees end to outflows as bearish bets dwindle. Let's see what's happening with Cathie Wood's fund here. Hey, everyone's
So let's start at the beginning.
So everyone's loving Johnny Bravo in the chat. All right, flagship ETF lures almost 294 million, the most since June. Meantime, bearish wages against the fund slid from all-time high. So I'll bring that up. Let's see what okay, so it's up 2% today. So it's still not that convincing compared to how much it's down from its all-time high. Let's see. It was down 55%. Now it's just down 50%. But the key is, are these companies going to eventually turn profitable? Because in the dot-com boom, she talks about disruptive innovation. There was a lot of disruptive innovation, but the companies still have to deliver. They still, like Amazon. Amazon did deliver, but a lot of these disruptive, innovative companies like Pets.com, in the dot-com bubble, they just went bust. So you may think it's a good price now, down 50%. But remember, in the last bubble, a lot of these companies went to zero. They went bankrupt. So that's going to be the real test, to see if these companies can actually deliver on what they're promising. Let's see what else is happening. We've got a lot to talk about. I'll probably make some videos on some of these topics today because, yeah, we've got a lot of juicy news today. Thanks, Corey. Markets will likely be choppy. Goldman Sachs personal financial management director. We're seeing a lot of banks getting pretty bearish, and they're putting pressure on the Fed to raise interest rates. Again, maybe this could be because this will benefit the banks. Higher interest rates, more profit margins. This is why we're seeing the bank stocks go up right now as well. And also with oil prices going up, we're seeing oil stocks go up as well. Okay, December jobs market showed resilience despite all the issues with Omicron. Let's see. The dollar loses appeal after stocks settle and haven demand ebbs. So yeah, we're seeing weakness in the dollar, and this is what's causing asset prices to go up. G'day from Germany. Morning from Australia. Henrik. This is fun, guys. I thought, you know what? I'll just do an odd live stream here and there. It's good to just have a real-time chat with you all, chill with you all. I'm going to be reading this news anyway by myself, so I thought, and because that's what I do in the morning here in Australia, I wake up, see what happened overnight in the markets in the US, read the news. So I thought, you know what? Let's read it together. Okay, US manufacturing revived by supply chain setbacks. So let's see what happens with US manufacturing, because yeah, that's definitely been hurting GDP with the deficits and with lower output. A lot about gas prices. So let's see what's going to happen with gas prices. What else is happening? How does Russia's army compare with Ukraine? I think it's a lot bigger. US holds world's top LNG exporter spot of European energy crisis. So yeah, we're definitely seeing the energy crisis get worse and worse in Europe, and this kind of the leverage that Russia has right now. And we're seeing Germany really not wanting to step in because Germany's really relying on that gas from Russia, from what I hear. Ooh, okay, so for all you taxpayers in California, this was very unpopular. I should probably bring these articles up a bit bigger so you can see them. It's pretty small for you guys. So California kills single-payer healthcare bill that would have doubled state taxes. So yeah, I think they were looking to increase taxes to about $18. So that definitely would have hurt. Okay, Richards, should I buy a home this year? I live in Western USA. Prices are 40% higher in my area since 2020. Well, look, there's a difference between buying a home for investment and buying a home because you need it for your family, and it's what your family needs, and if you can afford it. If you can afford it and your family really needs a home and you're sick of renting or you've had issues with renting, go ahead and do it if you can afford it. Just like, for example, you know, you need grocery bills. You may not wait for groceries to go on sale. You need groceries, so you go ahead and buy it. But if it's for investment, with interest rates going up, with prices already so inflated, it's a risky time, especially with the price appreciation. Now, what you have to know is with the US, and same in Australia, markets are very different from state to state, and even the capital city in the state can have a different market, and different suburbs have their own market. So you have to start speaking to real estate agents in your area, go to open homes. You have to really do your research to see what the trend is in your area, because there could be an area booming in one part of the US or one part of your state, but in your area, price could be falling. This is what happened in when I was buying a home in 2018. There was the east side of town. Those prices were plummeting. The premium end of the market, because normally the premium end of the market goes first, but the affordable end of the market, that was still booming. So I will do research for your area, see what the trends are for your area, because if if I do a video on the housing market, that's more in general. It doesn't get down to the nitty gritty. So yeah, go for open homes, see how long houses are on the market, how many days on market. And yeah, make sure you're not doing it because of FOMO. Make sure you're doing it because you can afford it. So yeah, that's what I would say without knowing too much about your personal situation. So I think I missed a super chat here. Spending some of those unrealized gains. Thank you. Oh, thank you. Montgomery. Thanks for that. All right. What else are you guys saying in the chat? Yep. Yeah, it's good. Support the truckers. What's going on there? Canada and Australia, good on them. They should be up to them what they want to do without going in too much to it, because YouTube don't like that. Texas power prices surge with cold snap poised to test grid. Okay. So Johnny Bravo, if you're still in the chat, your power price is about to surge. Okay. Grid operators expect demand to hit a winter record on Friday. Governor Abbott says ERCOT has excess power available. I think I did see in the news the other day, gas prices in the future markets, it spiked about 60%. So there's definitely some issues going on with gas, not just in Europe, but also in the US as well, and the UK. The gas prices, I'll see if I can bring up that story. Gas prices spike. Let's see. I think it was about 67%. See if Bloomberg has it. No, can't find it. But yeah, I remember seeing an article that gas futures are really skyrocketed. I think it was last week, about 60%. So job openings stay elevated as Americans keep quitting. Yep. There's obviously a lot of factors on why they're quitting. Maybe people doing what I'm doing. Maybe they started making money online and working from home, so that way they don't have to put up with a crappy boss. Or they can work from home, have more flexibility. There's definitely a lot of factors what's contributing to it. Also, with the markets roaring, a lot of people that were maybe planning to retire, maybe some boomers, they've had a couple of homes, their house prices appreciated. Maybe they've brought forward their retirement plans as well. So I think that's what could be part of it as well. Okay. See what else is happening. So NFL quarterback Tom Brady, 44. I'll bring this up again so you guys can see. He's retired officially. That's crazy. 44. I'm 29 now, and I go to the gym and I do something and my shoulder aches, my ankle aches, my knees ache. I don't know how this guy has done it until 44. He's definitely a specimen. Okay, what else? Beijing Olympics. Nike won't say where Teams USA podium uniforms were made. A lot of issues going with the Beijing Olympics. A lot of boycotts going on. A lot of people wanting to know what my portfolio is looking like. I may do that in a future video. But the thing is, with revealing my portfolio, is that's for my personal situation. That's kind of the issue I have with YouTubers recommending individual stocks or saying this is the perfect investment strategy, because if you're 21 years old and you're living in your mum's basement and you're buying cryptos on your mum's credit card, well, you're in a very different situation than I have a lot of viewers in my audience that are 55, 65. They may be about to retire. So their investment strategy is going to be very different. So it's very hard to say, okay, look, to a broad audience, this is the best investment strategy. And that's why I'm kind of hesitant to say it, because we've seen with other YouTubers, like Meet Kevin, he's had investment strategies. People have followed his investment strategy, and everyone's situation is different, and a lot of them have got wrecked. So you should never, look at a YouTuber's portfolio and go, okay, I'm going to follow that exactly because my situation is different, your situation is different, and yeah, across the board. But there definitely is some principles that I could teach you guys that is true across the board. And yeah, maybe I'll do a portfolio reveal soon, or maybe even. I've had ideas of creating a public portfolio where I just kind of document creating a portfolio from maybe 1,000 to 100,000 and documenting it and giving reasons why I'm investing at what at that time. Oh, JC0086, give us a holy smokes, Mickey came here for the flippity flip flap flop. All right, for you, holy smokes, everyone. What the flippity flip flap flop? That's what you came here for. You got it. All right, Facebook's funded cryptocurrency DM winds down. So yep, bring this up so you guys can see it. So yeah, Facebook was, or I should say Meta now, was planning on creating their own crypto, but nobody wanted it. I definitely wouldn't trust Facebook with my transaction data. We already know that they sell all our data right now, so definitely wouldn't trust them in the metaverse, and I definitely wouldn't trust them by using their own cryptocurrency. All right. Let's see. So value investing is back, but for how long? So that's definitely what we're seeing. This trend is with, rising interest rate environment, inflation environment. We've had these high growth tech stocks get to crazy valuations. We're seeing the great rotation, they're calling it, back to value stocks. And this can also be a defensive play because value stocks during a recession or just during a correction in the market, they're not going to get hit hard as much as the high growth, high PE tech stocks. So a bounce in yields is good news for dividend payers. And yeah, that's another good thing is during high inflationary time, during recessionary time, dividends, at least you're still getting your dividends paid every month, every quarter. And yeah, they're not going to get hit as hard. And companies that have good pricing power, so they can raise their prices without getting hit much by inflation. Like for example, consumer staples, and I guess you could say tech stocks as well have good pricing power. But for example, like builders, we're seeing construction companies that have to order a lot of they do contracts. They get people to sign contracts. For example, when I signed my contract to build my home in 2018, I had the price fixed for 2 years. So if you're a builder and you've got a lot of clients that fix the price in for their cost to build a year or two ago, and now you're having to buy goods which are 20% higher, it's companies like that have a lot of inventory that they have to order that get hit hard by inflation. Let's see what else is happening. Okay. Drought in Ethiopia leaves millions needing urgent aid, UN says. Okay. So market bulls are betting on a sharp and shallow Fed rate hike cycle. So yeah, I think this could be the reason why the markets are starting to U-turn. Let's see here what it says. So Fed tightening expected to top out below 1.75% by end of 2023. Charting Fed policy as risk asset swinging between extremes. This is something I'm worried about. The Federal Reserve, like I've been talking about, they were wrong on inflation being transitory. And they kept saying forever it's transitory. They were dragging their feet. And then in December, they admitted, okay, inflation's out of control. It's not transitory. But they didn't act. They still just dragging their feet. So they're saying that what's called forward guidance, they're jawboning the market. They're trying to talk down inflation. This is what central banks are doing now. So they're saying, okay, look, inflation's out of control. Well, instead of buying 80 billions of bonds, we'll only buy 60 billion. When really, what they should have done straight away is stopped buying bonds altogether, and they should have done a 0.25% rate hike if they were serious. But now what they're doing is they're dragging their feet. They'll probably do 1-2 rate hikes March, April, and I bet you they're crossing their fingers and praying that inflation goes away on their own, because it's definitely going to be big issues if it doesn't. So let's see what they're saying here. So while trying to map the speed of the Federal Reserve interest rate hikes has unleashed harrowing volatility in equities, expectations about the central bank's destination are keeping things from spinning completely out of control. Yeah, that's right. That's what we've been seeing. So they're saying that they expect interest rates to hit 1.75% by the end of 2023. So that's changed from what it was before of 2.25% to 2.5% in the fourth quarter. Oh, sorry. So they're comparing that to what they did. So yeah, this is very interesting. What they did in 2018, when inflation was already low, they lifted interest rates to 2.5%. When now inflation is triple what it was in 2018, but they're only going to lift interest rates to 2%. So it doesn't make any sense, people. They're just trying to pretend like they're doing something about inflation when they're really not. If they're really serious, they'd be lifting interest rates up to at least 3 to 4%. Okay. What else is going on, everyone? Yeah. Okay, let's see what else they're saying here. A low ceiling for Fed rate hikes, sturdy earnings expectations, and still strong economic growth underlined the stock bull case at the start of 2022. The S&P 500 closed out its biggest two-day rally since April 2020 on Monday, following a week that saw the benchmark post three of the worst intraday reversals of the decade. So that's crazy what we saw, everyone. I don't know if you realize how unusual this kind of trading volume we've seen over the past 2 days. This is decade record levels volatility. While the churning is a byproduct of Fed lifting rates effectively from zero, risk appetite should be okay as long as perceptions hold that the central banks isn't too high, according to Art Hogan. They were to raise rates 6 times over the next 24 months would get to 1.75%. So yeah, there's going on and on about this. Yeah, it's just more people commenting and speculating on what the Federal Reserve's going to do. So at the end of the day, it all comes down to what they're going to do. Let's see, what is Bitcoin doing? So Bitcoin's 38,700. So again, pretty flat with Bitcoin. You guys have any questions for me? That's pretty much most of the news for this morning. Let's see if anything else has come in the past 15 minutes. Okay, so for Australian viewers, Australia shares likely to rise and New Zealand shares gain. So see what you guys are saying in chat. Michael, please answer Patrick Knight. What did you say, Patrick? I can't see. Okay, API data recently showed a weekly US sharply forward for crude. Sharp rise for gasoline. So yeah, I think that's most of the news that I covered. Good morning. Thanks for that, Brandon. Awesome. Thanks for that, Patrick. BTC to 1 cent. I wish. I'm pretty sure a lot of people will be buying that dip if it went to 1 cent. Okay. Well, there's just a lot of volatility in the markets, Patrick. No one can predict what's going to happen in the short term. So yeah, you have to be very careful. Okay, let's see what's happening. Bloomberg. Hello, XY. And also, I never recommend shorting the markets. You would hear I never say go short. I never say sell puts, unlike some other YouTubers. It's a very dangerous game playing with leverage, and that's something I definitely never recommend. Even if I think the market's going to go down, I'm not going to short it because there's unlimited loss potential with shorting. So yeah, definitely don't play with leverage, kids. So where am I parking my money at? I'm just stacking the cash pile, waiting for good discounts to come. And yeah, I'll be making some decisions next month about what I'm going to be doing with my own personal portfolio. But yeah, gold and silver has been selling off a bit. There is a bit of a discount there. And if the Federal Reserve reverses course and they start printing money again like crazy in the second half of this year, if the economy slows, then gold and silver may see a rebound. But again, like what we've been seeing with the dollar, it all depends on what happens with the dollar, because we've been seeing the demand for silver and gold, or demand for gold, like I did in that report with what's happening in China, with what's happening, with China, demand is rising. Yeah. Okay, I think I'll take a few more questions and then, we'll call it a wrap, people. Let me know if you enjoy these market close live streams or just me going through the morning news with you guys. Because yeah, this is something I'll do anyway. So I thought, you know what, why not do surprise live stream? What are my thoughts about the Fed meeting on the 10th this month? It'll be interesting if they give a more clear-cut answer on what exactly they're planning to do with lifting interest rates. Because even though we all know they're going to lift interest rates in March, they didn't say they're definitely 100% going to do it. Do I think we're in a crypto winter? Yes. We've seen again and again with the cycles with Bitcoin, it's normally a 4-year cycle. I'll bring up the chart here while I talk about this. Normally what we see with Bitcoin with a 4-year cycle after the halving event. There was a halving event in 2020, and then that normally what we've seen through history. But again, remember, Bitcoin hasn't been around that long, so we still need a lot more data. But what has happened over the past couple of cycles is there was another 12 to 18 month to 24-month bull cycle after that. But all these crypto YouTubers, they were all saying, yes, it is going to enter into a bear market after December, January, like what we saw in 2018. We entered in a bear market after December and January, but now, you know, they don't really want to admit it. But yeah, I do think we are going to be entering in crypto winter. I don't think it doesn't mean crypto's dead or anything like that. I'm personally waiting for Bitcoin to hit around 20 to 25K range. Again, nobody can time the bottom perfectly. That's why I work with ranges to when I'll start dollar cost averaging back in. Yeah, just if you Google finance news and blogs, that should be the site that I was using. finviz.com. So George, yeah, we just discussed what happened in the markets with the close. Wasn't too much crazy activity in the markets today. They're all pretty relatively flat. And I just went through the market news at evening for the US, but morning for me. Just went through some stories, but I'll definitely be doing some short videos on what we discussed this morning, because there was definitely some interesting news. ICP in the computer, well, it definitely was a pump and dump. It's crashed about 90% now, so I don't really play with altcoins anymore. I don't have time to keep up with the latest altcoin, because one month or one quarter it's DeFi, the next month it's gaming, the next month it's NFTs. Really, it just flip flops with altcoins. So I don't have time to keep up with the latest altcoin trends, so I don't even bother. And I've been in crypto for a while now. So what I'll see is, you know, the top 10 altcoins, they change every cycle. So there'll always be a new trend, some hype. There'll be a lot of influencers pumping coins. And then the next cycle, the top 10 will be completely different. So I don't even bother now these days. Maybe for trading, yes, altcoins, but I don't bother investing in altcoins for the long term, because it just changes every cycle with what's going to be the next greatest altcoin. Thanks for the super chat. Is it auto? Thanks for that. Thanks, Jake. Oil going to 150. Ooh, that would be bad for inflation if oil went to 150. But yeah, we're still pretty far off the all-time highs of around, I think it was 120 to $130 per barrel. And now, obviously, with inflation, it could go much higher. Why isn't me, Kevin, buying the dips? I'm not sure. Maybe you need to buy his $1,000 course to find out. I don't know. That's why I don't sell courses here, guys. I just give you my thoughts and don't charge you anything for it. And I don't make people join my channel to chat in the chat either. You can chat for free. Prediction about Australian housing market. We did just get the CoreLogic data out yesterday. It's looking like Melbourne and Sydney, it is slowing. But what we're seeing with the smaller markets, like South Australia, Hobart, and we're definitely seeing a boom in Queensland. So just with the state immigration, I think Queensland will probably still do well over the next year. But Melbourne, Sydney is definitely going to slow down. And what's happening right now is the RBA, unlike other central banks around the world like the Fed, they're being very slow again to react to inflation. We're seeing inflation go up, but the central banks use the same story. They're saying, oh, look, we don't want to lift interest rates because we want wages to go up. But what we're seeing time and time again, inflation is always higher than wage growth. So that's just an excuse for them to keep the bubble going. Big Connect. Who here remembers that scam, Big Connect? That was funny. Thanks for that, Uncle Zog. That was funny. I'm now financially independently free. That was funny. All right, everyone. I think that'll do for now. It was really fun chatting with you guys, doing the morning news. So let me know if you want me to do the odd live stream here and there. Yeah, definitely don't mind doing it. Just when I wake up in the morning, Australia time, read the news, we can go over it with you guys and have a bit of a chat. But yeah, enjoyed it. So yeah, thanks for watching, guys, and yeah, I'll make some videos on some of the topics we spoke about today. What's this? Oh, sorry, I got another super chat. Inherited a large sum of money. I want to put it on Vanguard. Well, chat's gone there. But I don't know when is a good time to jump in. Look, it's very hard time it's very hard to predict the market. I can't give financial advice directly. But in general, if you've got a large sum of money, what I would do, I wouldn't put it all in at once. I would just slowly dollar cost average in on red days. But yeah, I can't give financial advice to your specific situation. But yeah, that's what I would do for my personal situation. I wouldn't put it all in at once. It's very risky. But hopefully, you know, if we do get a bear market, they'll give you some great buying opportunities. And thanks for the super chat as well, Fred. All right, one more holy smoke. So holy smokes, everyone. That was a crazy, wild, live stream. Thanks for all your help today and all your support. And of course, I'll see you in the next video.